All right, in this video, we're going to be talking about entering Square point of sale sales into QuickBooks Online. And just an overview of what we're going to be going over in this particular workflow method is using a journal entry. So we're going to be creating a journal entry template. And what this journal entry template is going to allow us to do is enter these sales in enter any interval that we want. Usually this is done monthly, but you can do it weekly, daily, however you like. And the reason this works is because we're going to be utilizing clearing accounts or holding accounts, undeposited fund accounts, however you want to view it. There are asset accounts on your balance sheet. And these are just going to be temporary accounts to hold these funds in. And we're going to be putting all of the funds collected from the sales, let's say we enter them for the entire month in just one journal entry, into this account. And that'll allow us to, whenever the funds are being deposited into your bank account, to transfer them out of those clearing accounts into your bank account. And the reason this is important is because you want to match up your deposits into your bank account for the exact amount and the exact days that it's happening, because this will allow you to do bank reconciliations. What I would recommend you do if you're setting this up on yourself, just sit there and watch the video from beginning to end first to get a full, more general understanding of the entire workflow, and then go back, watch it again, and then follow the steps as we go. And the reason I recommend this is because, like, for example, the first thing we're going to be talking about is checking your chart of accounts and making sure that all those accounts are in there the way that you want. And in order for you to make those decisions, even in this first step, you really need to understand the entire process, including what I like to call the back end of the process of what we're going to be doing in the bank feed or within your bank account after these sales are entered. And this will make sense as we go. But again, so I would recommend, if you can, watch the whole thing, get an understanding, and then go through it step by step. So having said that, what I like to do, so we have Square open here, and then we have a QuickBooks Online account. And we're just going to be walking through how I set this up if I have a new bookkeeping client who's using Square and QuickBooks Online, of the steps that I would take to set this up. So the first thing I would like to do is make sure that all of the accounts in our chart of accounts are created before we jump in and try to start creating the journal entry template itself. And in order to do this, the first thing I like to do is find the report or reports in the point of sale system in order to get kind of a list of accounts that we think we're going to be needing in our QuickBooks Online. And in Square, in this particular case, the report we're going to be using, so in the left column here, you'll see reports here. So if you click on reports, it'll usually, at least for me, it automatically shows the sales summary report. So if we scroll down, you see the actual report here. And I really like the way, and we'll talk about this a little later, I really like the way this report is laid out in terms of how in relation to this journal entry and the kind of workflow we're going to be working with. What we're going to do at this stage, again, we're going to be making sure in our chart of accounts on our QuickBooks Online that we have everything in there. I like doing this first before we start jumping into the journal entry, just to keep things kind of organized and clean as we go. So on the QuickBooks Online side of things, we're going to go on the gear icon here in the top right. And then under settings, we're going to go here in the chart of accounts. There's a few ways to get here, but just go to your chart of accounts, QuickBooks Online. And then on the Square report here, we're just going to go down the list of these categories here. And we're going to, again, make sure that we have an associated account in our chart of accounts for this. So the first section here, so we have sales. You have gross sales here and then net sales. So you can technically potentially just put in the net sales, but I always prefer to put in the gross sales and then also have separate accounts on our profit and loss for returns and discounts. And here's the reason why. It's for the tax form. So whether you're set up as a sole proprietor, which means you'll be filing a Schedule C, or if you're set up as an S Corp and you'll be filing the tax form 1120S if your tax is an S Corp, then on both of these reports, if you just look at them quickly here, you'll see the gross sales, and it's a little cleaner here, I think. You'll see the gross sales, and then you'll see there's returns and allowances, and then you'll have cost of goods sold, and then you have your gross profit out of that. So for that simple reason, because on your tax form, it separates them out. It doesn't have just gross sales, it has gross sales and the discounts, or it has returns at least. That's why I like usually just recommending breaking these out. But anyway, so having said that, so first we have gross sales. So here in your chart of accounts, you just decide that if you just want to have one bulk sales account, and that's where all your sales are going to go from Square, then you can just go with that. Or if you want to break it down, whether you're using, and this we're just going to say for Square, because this is usually what Square is used for, but not always, is let's just say it's a retail shop. So, but let's say you have a retail shop and you also have an online portion with like Shopify or something. If you want to break down the sales and have two different sales accounts, one for like retail sales or online sales, something like that, then you can break it down on this stage. So at this stage, basically just decide on your profit and loss, which income account, if you want to create a new one, you want to put all these Square sales into. In this particular case, we're just going to go into a bulk sales account. And then next we have the returns and discounts. In this particular case, I think we have a refunds account set up. So we're going to keep that. Now here in the account type, you see that it's income, and that's what I would recommend for you as well. I see sometimes it's putting costs of goods sold, things like that, or expenses. None of them are really exactly right or wrong, I don't think. Talk to your tax professional about that, but I usually just like to put it as an income account. And the reason for that is we're going to be debiting them ultimately in the journal entry. And this will just essentially create a negative income on the top line. So we have your gross sales on the top line. Then underneath it, still under the income section, your profit and loss, you'll see negative, or you'll see refunds and discounts, and there'll be negative amounts under there. And then you'll have your net sales. The reason I like that is, again, because it follows the general outline of the tax form you're going to be filing. So we have refunds set up as an income account. And then we also, I believe, yes, we have a discounts given as well as the income account. And if you don't have these, of course, add them into your chart of accounts now. There's no separate net sales account. That's just the difference of all these. So now we have taxes. So we're going to use tax liability, sales tax liability account in this case. And the main thing to consider here in this stage is to know, depending on the different avenues you have of all of your sales tax collected and paid, let's say, for example, you're only using Square. That's the only sales tax you're collecting, and you're only paying one jurisdiction or whatever, your sales tax. So at that case, you would probably just be able to get away with one sales tax liability account and just go with that. And we have that here as sales tax payable, and that's the other current liability. Now here we have tips. For tips collected, this is definitely a discussion with your tax professional because it's different how you're set up in terms of how you're going to be taxing everything. You may be handling this differently. And so I'm not going to go into that kind of stuff in this video. So talk to your tax professional for sure about this portion of it. For the sake of this video, we're just going to say that we're going to set up tips collected as a liability account. So we don't have that in here. So we're just going to go to new liabilities, other current liabilities. This doesn't really matter too much. And we're just going to put in tips collected. And again, this is the current liability account in this case. And then we have gift card sales. So this actually technically isn't gift card sales. I'm not a huge fan of how they word this here, but overall this report's great, I think. But this is actually gift cards purchased. And the reason I like gift card sales because it's not technically a sale until the gift card is redeemed and used to purchase something. And actually because of that, that is the reason why usually gift cards are set up as liabilities. So these gift card sales, these gift cards that are purchased is technically a liability on your side because you can't redeem them, or you can't count them as sales until they're actually used and to purchase something. So that's why it's set up as a liability in this case on your balance sheet. So for these gift cards, we're going to set them up as a liability. So we're going to go new again, liabilities, other current liabilities. Again, this doesn't really matter too much. And let's say in this case, let's call it Square. Let's go Square gift cards outstanding. That's just the way I personally like to look at it. This liability account is how much gift cards are currently outstanding that haven't been redeemed yet as to purchase something for sales, for revenue. All right, so now we have all the chart of accounts here for this top portion. And then now we're going to talk about the payments bottom portion. And again, the reason I really like this, the way that Square in particular has this report set up, is it's exactly broken down how I like to view this kind of workflow we're going to be doing with the journal entry. I like viewing it as the top portion, which is the amount collected kind of portion. So even though this says total sales here, this isn't actually total sales, it's actually total collected. And the reason for that is because, again, we're talking about gift cards being purchased, which is not sales yet. We're talking about things like tips being collected, which is not sales. But still, you see this kind of relationship. We're in the top portion, so you have the total sales, total collected here of this $58,945. In the bottom portion, we have the payments section of things. And here, again, the total collected is the same exact amount. And that's exactly what we're going to be doing in the journal entry. We're going to have the top portion, we're going to break out like sales and discounts and sales tax collected, things like that. In the bottom portion, we're going to have the payments types. And this is going to break down the different types of payments, and it's going to balance out and equal the exact amount in the top portion here. So there's a lot of things to consider here in this bottom portion in terms of the chart of accounts. And again, this right here is where I start to recommend why you should watch the entire video, then come back, because a lot of this stuff and how you set this up is going to be determined by how the back end of this workflow is going to work for you. First, we have cash here. What we're doing here, so we're setting up in this stage, we're setting up the holding accounts, clearing accounts, however you want to think of it, undeposited funds accounts. So we're going to be putting in for the entire month all the cash, all of the Square credit card payments collected into these clearing accounts. And then whenever they eventually get deposited into our bank account, then that's when we clear those out. So we want to have different clearing accounts set up for different avenues that are going to be deposited into our bank account. So to start here, so we have cash. Let's talk in combo. Let's talk about cash, and other here, let's say that that's checks. So first, you want to think about cash and checks in this situation, how you want to handle that, because they're a lot of the times kind of interrelated with each other in terms of how you deposit them into your bank account. You have a few options you can go about doing this. What I've usually like to do, just to keep things a little bit cleaner, is I usually like to have, so let's say, for example, in this case, let's say you always have $200 in your cash drawer. And let's say that no matter how much cash you collect throughout the day, at the end of the day, you deposit whatever amount to the bank that leaves you with $200 in the drawer for the next morning. If that's the case, sometimes what I like to do in that case is have a couple cash accounts set up in order to keep that a little bit cleaner. It's not necessary, but so for example, you can have like this cash on drawer account set up on your balance sheet as a current asset, or in this case, it's set up as a bank account. It's the same thing in terms of it's an asset on your balance sheet. In order to keep things a little bit cleaner, so then your cash and drawer will always say $200 month to month, and then having a separate undeposited funds or cash clearing account or cash to be deposited, whatever you want to phrase it or call it, to have a separate account for that. And that's where the funds are going in and out throughout the month whenever you're collecting cash and then eventually depositing it. So that just keeps things a little bit cleaner. So I usually like doing it that way to separate it. So your cash in the drawer is always that amount, that $200 or $400, whatever it is. So that's an option for you. You can obviously as well just have one cash on hand account. And then what will happen in that case is that account will be the one cash account on your balance sheet. And then whenever you're collecting payment throughout the month, it's going to be increasing. And then whenever you deposit those, it's going to be decreasing. And then ultimately throughout the months, it's going to generally average out to if you look at the balance register, then eventually, and within that account, it'll eventually usually balance back out to 200 or 400, whatever's in your drawer. So that's an option as well. Again, I like separating them. The only downside is that I like separating them because it's cleaner. The only downside is that you have to be a little bit more aware for other things, like let's say cash expenses, for example. So let's say you're collecting funds throughout the day, cash, I should say, and then let's say you pull $20 out of that drawer to pay for something, some sort of expense. In that particular case, if you're using both cash accounts, then you need to make sure whenever you're entering that cash expense into your QuickBooks Online that you need to credit actually the cash clearing account or the undeposited funds account, whatever that is, and not the cash and drawer account. Because it would seem to make more sense because you're pulling $20 out of the drawer to credit the cash and drawer account. But let's say you're holding $200, you're collecting cash, and then in the day you deposit cash until you have $200 left in your drawer. If you credit that cash or that expense with the cash on hand drawer or cash and drawer account, then you'll be showing 180 cash in drawer on your balance sheet. But in reality, you have $200. So what would happen is that account, the cash and drawer asset account, would be understated by $20, and then the whatever the cash payment clearing account is actually be overstated by 20. So you just have to make sure if you're doing both of these that you understand what you're doing. So if you enter a cash expense like that, you actually should be crediting the cash payment collected account, because that's actually what you're pulling from, because you're going to deposit enough to have $200 left in your drawer. But so again, in this case, so let's say we're going to have one cash and drawer account to keep things clean, and then we're going to have a separate cash on hand account. But another thing to consider also, if you're going to do that, is also check payments. So you can either separate the two out to where you have one cash payment collected clearing account and then another check payment clearing account or undeposited funds account, however you want to word it, and then separate the two out in order to keep things a little bit cleaner, a little bit easier to audit. Or in this case, you can combine them into just one undeposited funds account, so that it's easier that way whenever we were working on the back end of this workflow of whenever the funds are actually be deposited into our bank account. Let's say you're usually depositing into your bank account for checks and cash combined. If you just have one undeposited funds account, it's a lot easier in that stage, because then you can just see that you deposited something in your bank account, and you can just categorize it as crediting out that undeposited funds account. So that keeps it a lot easier. However, if you do want to separate them out, it's cleaner, it's a little easier to audit. But if you do that, and we'll go over this in the video, you'll have to separate them out whenever you put in your deposit entries into QuickBooks Online. You have to separate how much of that was cash and how much of that was checks. And again, we'll go over that. So you have to determine here of what you prefer and what you want to do. Again, in this video, we're just to be able to cover kind of everything. We're gonna say that we're gonna separate the two out. But we're gonna say we want to have one cash and drawer account to keep things clean. And that's just, in this example, let's just say we always want to keep it at $400 for the most part. And then we're going to have a separate clearing account for cash payments. So we're going to go to assets because it's an asset on the balance sheet, other current assets. Again, this doesn't really matter. You can name this whatever you want. In this case, we're going to call it cash payments to be deposited. And then again, we're going to separate them out. In this case, you don't have to. You can potentially combine them into one undeposited funds account, but we're going to separate them out, meaning cash and checks. We're going to create a second one, and this account's going to be called check payments to be deposited. Now going down here, so we see card here. What we're going to do here, so we're going to create a Square clearing account for this, so this is for debit and credit cards collected via Square. That Square itself is going to deposit into your bank account. And same deal, it's going to be an asset account on your balance sheet. So again, assets, other current assets. Then we've got the Square clearing account. We're not going to worry about, so in this particular example, let's just say that Cash App is being deposited with the Square funds. If there's some other avenues here that are being deposited separately into your bank account, then you want to create separate clearing accounts for those. And I did skip, so also to gift cards here. So for this particular case, and we'll go over this when we're creating the journal entry, we're going to use the same exact gift card liability account that we already have in our chart of accounts now in this bottom section. And then finally, we have the fees here. So this is the Square merchant fees. And we're going to want an account in our chart of accounts for this. We're going to be entering these in the journal entry stage of this. And it's up to you to determine where in your profit and loss to put this. It could potentially, I could see where you could say it's a cost of goods sold because it directly goes up and down with your sales. In this particular case, I think from past videos, we have a bunch of merchant fees set up under expenses in this particular case broken out. So we're just going to add another one here for Square fees. All right, so now at this stage, we believe that we have all of our chart of accounts, and we'll go over cost of goods sold later. But so for now, we believe we have all the accounts on our chart of accounts that we need. So what we're going to do next is create the actual journal entry template itself that we're going to be using on a month-to-month, week-to-week, day-to-day basis. It's up to you. In order to do that, we're going to go back over to QuickBooks Online, the gear icon here in the top right. We see under list, we see this recurring transactions. Even though we're going to be creating a template, it's under recurring transactions. So click that. And then we're going to go to new here in the top right. Transaction type, again, we're going to be doing a journal entry. Watch my other videos if you want to make this. Watch my how to enter daily sales in QuickBooks Online if you want to figure out how to make this a sales receipt or an invoice. But in this case, keep it simple. We're just going to make a journal entry, hit OK. We can name this whatever you want. We're just going to do Square sales here. And then we're going to make this unscheduled. That's what's going to make it a template versus a recurring entry. All right, so now what I like to do, me personally, I like to just go through just kind of column by column in terms of how to create this journal entry template. And it's just my own personal preference. So what we'll do first is just switching back between the Square report and the QuickBooks Online journal entry creation here. First, what I like to do is just go through for all the chart of accounts we just created and just enter them all. I like to do it in order of the Square report because a lot of what we're going to be doing is just kind of copy and pasting and going down, and having them in order, especially for things like returns and discounts and things, would just help eliminate the potential errors if they're in order, and it's just easier. So again, we're just going to go down and just enter the associated chart of accounts. So first we have gross sales. We mentioned that we're just going to do regular sales in this particular case. And then we have returns here. And remember that in this particular case, we have it set up as refunds as the name. So we're going to put in refunds. And then we have discounts. And I believe that's the discounts given income account. So we'll put that in here. Net sales is nothing. And then we have taxes. So we have that sales tax liability that we created. That liability payable is in there. And then we have tips collected. Again, in this case, we said it was liability, but check with your tax professional on that. So we have the tips collected. And then we have gift card. So we're actually going to put in gift card twice, and I'll show you here in a second. But for now, we're just put in, so we have the Square gift cards outstanding liability. We're going to put that in there as well. And then, so that's everything in the top portion. Then we're going to move down here to the bottom portion. And this is all one journal entry. Again, even though I like looking at it's kind of two different things, the top and bottom, it's all just going to be in one journal entry. So we're just going to keep rolling down here. So we have the cash. Again, in this particular case, we decided, I should say, that we want to put the payments collected in this portion, not as a cash and drawer, and not as a bulk undeposited funds, as also including checks. We want to separate them out. So we want to do this cash payments to be deposited asset account. And then we have the card here. And again, the card is ultimately the Square payments that's going to be deposited. So we're going to use a Square clearing account, asset account here for the card. And then we have gift card. And for now, I'm just going to put this in here again. You'll see how this is going to work out. But this same Square gift cards outstanding account, we're just going to put it in here twice. And then we have other. Other in this case is, we're going to say is checks. You have that check payments to be deposited account because we're going to separate those out. Cash App in this case, let's just say that that's included in the regular Square deposits and it's not separate. If it is separate, figure that out on your end. And then if it is separate, then you can just create a separate Cash App clearing account. It'll be the same concept as all these other ones. Then we have fees, and the fees is the Square merchant fees in this case. And in this particular case, Square is keeping the fees first before depositing the net amount into your bank account. And what I mean is that if they collect $100 in card sales, they're going to keep $5 of that of their fees portion, and then they're going to deposit $95 into your bank account. And because of that, we want to enter the fees in this stage of the journal entry here. So we're going to add that to this journal entry. Some point of sale systems, they don't do this. They'll deposit the full $100 into your bank account, and then once a month they'll take all their fees as a separate deduction from your bank account. If that was the case, then you wouldn't add the fees here. But Square, for now at least, that's where they're handling it. So we're going to add the Square fees in here in this journal entry. So now we have all the accounts just listed out here. And then next, what I like to do, I like to just put numbers here in the debits and credits just to have a quick reminder when you're copying, pasting, and things of whether they should be debit or credit. And I'm just going to quickly go through this. I think if you're setting this up, especially because every business is different, so you need to know, in my opinion, if you're doing this kind of stuff for your own business, I believe that you should know what you're doing here in terms of what accounts these are, in terms of what categories in the financial reports, and whether they should be debited or credited or increase or decrease, and how that relationship works. If you don't know that, I have a course going over that. It's a full bookkeeping course, and the majority of the course is on stuff like this in terms of the two main financial reports, the main categories, debits and credits and journal entries, whether they're debited or whether they're increase or decrease, depending on what category they are. So to make these kind of things a lot easier. So again, I'd recommend that if you want to fully understand this. But for now, I'm just going to roll through and I'm just going to tell you what we're going to be doing in this video in terms of debits and credits. So the sales account, we're going to be crediting, we're going to be increasing it. Again, the refunds and discounts or income accounts, we're going to be making them negatives, decreasing them, so they're going to be debits. Sales tax payable, we're going to be increasing that payable, so it's going to be a credit. Same with tips collected. Gift cards outstanding. So in this particular case, again, we're talking about the top portion here. So even though this says gift card sales in this top portion, what this is actually reflecting in this case is 145 here. What this is actually reflecting is gift cards that were purchased, not redeemed and used to purchase something from you. So because of that, because someone paid us $145 in order to buy gift cards from us, we're going to be wanting to increase the liability because that's increasing the gift card's outstanding liability on our balance sheet in this particular case. So on this section of things in the top portion, this gift card's liability is going to be credited in order to increase that liability. Now we have the payment section here. We're working on the bottom section here. Now we're working in this section here. So we have a lot of the all the clearing accounts. They're going to be asset accounts on the balance sheet, and we want to increase them in this stage because whenever we're recording the sales here and the payment collected, we want to increase those holding accounts. So say in this particular case, the cash payments to be deposited account. We want to increase this account because whenever we go and actually deposit that cash into our bank account and it hits our bank account, what we're going to do is transfer so basically we're going to be moving the funds from the asset account of cash payments to be deposited into our bank account. So it's going to be a credit and a debit into the bank account. Because of that, we want to debit it to increase in this stage these clearing accounts. Same thing, Square clearing account is going to be a debit. In this case, so with the gift cards outstanding. Again, in the bottom portion here, what this is representing, this gift card, so what this is representing is the actual redemption. So some people came in and they used their outstanding gift cards in order to purchase something. So this is when we record the sale actually of it. Our gift card liability outstanding is going to be lowered now because we don't have that liability anymore because the gift card was redeemed. And because it's set up as liability, we want to lower that. We're going to debit it here. And then again, this is the same. This is an asset account of a clearing account. So we want to debit that to increase it. And then merchant fees is an expense account or a cost of goods sold account. Both in the same way, we want to debit it in order to increase it. And then at the end here, you just want to balance this out because we try to save the template. Because these don't balance, it'll show an error message saying that they're not balanced. So because of that, so we have 7 and 4 here. I'll just increase this by 3 in order to make these balance. So just do that at the end here. But again, the only reason I'm putting numbers in here is just to have another visual of whenever we're copying and pasting really quick of where the debits and credits are. But I also like to add it here in the description as well, just to have multiple ways of just reminding yourself of where to put these numbers. So in the next column here, so yeah, speaking of that, so we have the description coming up here. And me personally, what I like to do in this description portion of it is here I like to make, basically I like to put just notes to myself whenever I'm entering these on where in the Square report to come up and find these numbers after I put whether it's debited or credited. And here's what I mean. So here I like to put credit first. So we put credit in the description. So we have the sales here. So looking at the report, what we're going to be doing, where we're going to be finding these numbers whenever we're doing this is under gross sales here. So I like to put credit and then gross sales. And then we have the refunds here. So it's going to be a debit and then it is under returns. So then I'll just put returns. And then discounts given, again, it's a debit and it's going to be discounts and comps. So we'll just put discounts here. And then we have sales tax payable. That's under taxes here and it's going to be a credit. And then with tips collected, same deal. It's going to be credit and it's going to be under tips. This gift card's outstanding. So it's going to be a credit. And then here it's going to be under gift card sales, not under gift card here in the bottom. So we can put credit and then gift card sales. Now in the bottom portion here, so you have the cash payments to be deposited. That's going to be a debit. And that's going to be under cash. All right. Now here's an important topic here. So first off, it's going to be debited, obviously. But how we're going to find this number is not, so this is the Square clearing account. What we're putting in here, let's say for the whole month here, what we're going to put in is the amount that we believe is going to be deposited from Square from card payments into our bank account. Now, if you remember, what Square does is they keep the fees first. So if you collect $100, Square is going to keep $5 and actually deposit $95 into your bank account. However, this number right here is gross before fees, Square fees collected. So what this would show is $100 in the example I just showed. But what we want to put in this entry here is actually 95 because we want to put the amount that we believe Square is going to be depositing, which is after fees. So we don't just want to put the card number here. What we want to do is I put card net fees. You can word it however you want. Essentially what this means is that whenever we go through this, and we will go through this exact example, we don't want to put in this full 52,000. We want to put in 52,000 and subtract the fees, the 1,600, because that's ultimately what's going to be deposited, because Square, again, is only going to deposit after they take their fees out. So however you want to word it, this is actually going to be the Square card amount collected minus the fees, where the fees are subtracted. In this case, we're just going to put card net fees. To remind yourself, whenever we're doing this, we need to subtract those fees out first. Now here we have the gift cards outstanding. And again, this right here is showing the gift cards that were redeemed for sales. So this liability account here, we want to debit it to lower it. And that's going to be lowering that liability because those gift cards are no longer outstanding. And that's just under gift card. Then we have check payments to be deposited. Again, that's going to be a debit. And in this case, we're going to say that that is the other. If you look back at Square here, that's the other here. Let's say that's checks here. We're not going to worry about Cash App right now. What we're going to say in this example when we go through it is that this $23 is actually under other. But let's say that's, again, checks that are collected. And now finally, we have the fees. And the fees here, again, are going to be debited. And that's just under fees here in the bottom. So that's the majority now of the actual journal entry template, just going through column by column here. And then finally last here, so we have this name. I always recommend putting something here. It's useful for certain reports and things. So you can run different sales by customer, which will just show Square here, reports. Also too, when you're looking at different expenses and things that we're doing in here, like the Square fees, if you just have fees, you can make it Square as the vendor. But anyway, I always recommend putting something here. And most of these are just, you can create a Square vendor, a Square customer, whatever makes more sense. In this case, let's just create a Square customer. So we're just going to put this in the template here for all of these. And again, I'm not going to go over too much as to why this is useful, but it's really easy to do in this stage. And there is definitely situations in the future where this can come in handy, breaking this out as a Square customer versus just leaving this blank. All right. And then finally, so we're not going to go over this in this video. If you have some sort of location or store or something set up that's listed here, then of course too in the template, you can go through and choose those, but we're not going to do that in this video. So having said all that, we have the template now fully created of what we're going to be doing here. So we can go ahead and save this template. And now what we're going to do going to go through an example of actually putting in these numbers. How we're going to be looking at, so right now it's sometime in October. And let's say that we want to put in all of our Square sales into QuickBooks Online for last month, for September. So what I would do is for us to go into QuickBooks Online, go to your recurring transactions list, which is again found here in the gear icon, clicking here, and then finding the Square sales unscheduled journal entry template we just created. Hit use. And then we're going to make it for the last day of the month or the first day of the month, whatever you prefer. In this case, we're just going to make it last day of the month. And then we could just put in Square sales, whatever you want as the name. Then we're going to go into Square. Again, under the reports, we have the balance summary. And then we have this set as last month, which is for September. And then essentially what we're going to do is we're just going to follow in the description here of where to find these numbers. We're going to go through and copy and paste with only one calculation we need. The rest of it, we're just going to copy and paste. So in this video, we're going through a lot of setup and figuring out the back end and everything. But once you have this set up, it's really easy to enter these. You're genuinely just copying and pasting for the most part, going down the report into this template. So first we have the sales, which is going to be just gross sales as a credit. So we go into the Square report here. And what I like to do personally, and when I'm doing this video, you can't see it because it's not going to show up on the screen. But I just like to double click on the number, which in this case is just gross sales, and then hit on Apple. I think it's on Apple, it's Command. I don't know what it is in Windows, but if you hit Command C, that copies it on your keyboard. And then come back over here, click under credits, and then Command V paste it. That's just what I personally like to do. And then we have refunds, which is under returns. Again, double click, Command C, back over to QuickBooks, Command V, discounts given. Double click, Command C, go back into debit, Command V to copy or to paste. Then we have sales tax payable, which is going to be a liability. Again, same thing. Tips collected, same thing. Double click, copy, paste as a credit. Gift cards that were purchased, we're going to increase that liability, so we're going to credit that. So that's the whole top portion here. Now we're just going to roll down in here in the bottom portion. So we have the cash payments collected, same thing, just rolling down here. And now here's what I'd like to do with this. Because remember, for the Square clearing account, we're actually going to subtract the fees from this. And this is it's good with this journal entry because if you forget to do this, your debits and credits won't balance. So then you'll start to be able to figure out why. And usually this would be the mistake of why they're not balancing. So there is sometimes if you forget to do this, forget to read the description here, it won't work and it won't balance, which is good. But what I like to do personally is I just like to still copy and paste the whole thing. First, go back, copy the fees, and then you click to the right here, put it in a subtract, hit paste, hit tab, and then it actually subtracted that for you. Or of course you can just do it on a calculator, Excel or whatever, and put that in there. But what that is now, is this 52,800 card amount collected minus the 1,600 in fees of this 51,000. So next we have the gift cards that were redeemed for sale. So we would just want to lower that liability. So we're going to debit that. Again, we're going to say that this $23 is under other as a cash payment. So we're going to say we collected $23 in check as a check payment. We're going to debit that. And then finally we have the merchant fees, which is this right here. And what should happen is this should balance out. And you can see here that it does. So we have the $59,726.54 on the debits and credit side of things. And then what I like to do personally, you don't have to do this, but I just like to clean things up. I like having it under description, under the template as notes to myself. And then when I actually enter them, I just like to delete these just to keep things clean. But again, obviously that's fully optional. So this is what the journal entry is going to look like for you. And so we have separate debits and credits, and then yeah, they all balance out and everything. So we can just go ahead and save and close this. And now quickly, before we move on to what I like to call the back end of this workflow, I want to very briefly discuss cost of goods sold. So you can either make this a separate journal entry template and add it to your monthly workflow, or because it's going to be the same debit and credit, you can just add it to this same journal entry to include it in your sales entry. It's really up to you. So in this case, if we'd had some cost of goods sold that we were including in our square numbers, and again, this is a discussion with your tax professional. It's really determined too on how your entire bookkeeping workflow is, if you should be actually recording cost of goods sold here, but I'm not going to get too much into that in this video. But if you are, then essentially what you would do is just debit your cost of goods sold amount and then credit your inventory asset account that's related to your Square asset merchant, whatever the thing is that you're selling with Square. And then you would just debit and credit. It'd be the same thing though. You would put that amount in here, the same amounts, and it would still debit and credit using this template. But again, that's really all I'm really going to talk about, cost of goods sold. But that's how you would handle that. So now let's move into what I like to call the back end of the workflow. So, and what I mean by this is that now that the sale entry is created using this journal entry, there's a few accounts that are on there that's going to be affected throughout the month with your bank activity. Money coming in and out of your bank account that's going to directly affect the accounts that we put funds into or out of using this journal entry that we just entered. And it's important to know of how you're going to handle that in your bank feed based on the entry that we just created. And here's what I mean. So let's go back into the journal entry we just created. And I'm just going to go through line by line here and talk about whether the items are open-ended or not. And here's what I mean. So first we have the sales. This is not open-ended. We entered the sales. Nothing's going to happen in and out of your bank account at this stage. It's going to affect these particular sales because all the money that Square is going to be entering is we're not going to be adding any sales because we already added the sales here. Same with refunds and discounts given. Those are closed out. They're done. There's nothing else we need to do about that. Sales tax payable, for example, though, is what I would consider to be an open-ended account here. And what I mean by that is that whenever we entered this sale entry here, we increased our sales tax liability on our balance sheet outstanding by $3,200. And eventually, out of our bank account, we're going to be paying a sales tax. And so it's important to understand and note, however you want to in your workflow, that whenever this sales tax payable amount that was collected through your Square sales is paid, then you need to categorize it as this same sales tax liability account. And that'll be a debit, which would be lowering that liability account. The reason that this is important is that I've seen something like this will be integrated or entered or whatever as a liability whenever the sales tax is collected. And then whenever you're working through the client or whoever is working through their bank feed and they pay the sales tax, they then categorize it as a sales tax expense. And that's not correct in this case because then what you're doing is you're forever increasing a sales tax liability in your balance sheet with this entry. And then you're also just forever increasing a sales tax expense account on your profit and loss. And this liability account is never going back down. So it's important to understand that in the back end of things that you need to be debiting the same exact sales tax liability account whenever you are paying this liability. Same with tips collected. Again, I'm not going to get too much into this, but let's say you would need to set up something in your payroll if you're separating out tax collected or tax paid to your employees, that if you're setting it up as a liability in this stage, you also want to be debiting for this same amount, this same exact account from your balance sheet, this tips liability account. So you want to make sure that's all set up correctly as well. So gift cards outstanding, this is actually closed because what we're doing in this workflow here is that whenever people purchase gift cards, we're including it here, increasing that liability. And then whenever people use gift cards in order to purchase things, we're decreasing that liability here. So the gift cards are relatively closed off in terms of this particular workflow. Now we have cash payments collected. And again, I want to talk about cash and checks kind of together here because they are related. If you are just using one account, let's say, for example, let's just say you decided to use just one undeposited funds account for cash and checks collected. Then what you're doing is you're collecting cash and checks throughout the month from payments. And then throughout the month, you're also depositing these cash and checks into your bank account. And whenever you're working with your bank feed, these deposits show up as a certain way. They look a certain way in your bank feed. They have a certain description and it's a deposit into your bank feed. So you know what they are. You know that they're cash and check deposits. So one thing that you can do, if you're combining them in the journal entry stage as just undeposited funds. So whenever you're entering your sales, you're adding cash and check payments together. Then what you can do is just set up a bank rule to transfer from the undeposited funds account to your bank account whenever the bank description shows that you deposited cash and checks to your bank account. And what this transfer is essentially is just really a debit and a credit. So you would say transfer funds from undeposited funds into your bank account. And essentially all you're doing is just crediting undeposited funds and then debiting your bank account. And again, most likely what you could do is just set up a rule to transfer it from your bank feed. However, if you combine them, or if you separated them like we did in this case, So we have if you remember, so we have a checks payments to be deposited account, and then we have a cash payments to be deposited account. If that's the case, then if you're depositing cash and checks into your bank account, you need to separate those out. Because if you just all categorize them on the back end of things as cash payments deposited or check payments deposited, then that would be incorrect. One of them would be too high and one of them would be in the negatives. So what you would do, again, you can set up a template for this, or you can just do it as you go. But what you would do, because you can't set up a transfer or a bank rule for multiple accounts like that, especially if they're varying in their amounts, is set up a deposit template to use. And essentially what you're going to be doing, so we're going to set up as a deposit into our bank account here. And then this receive front, so the bank deposit here, or the bank account here, is what's going to be debited. And I'll show you just as a journal entry too. So you can either make it a bank deposit, or what I like to do is just use a journal entry. It's more straightforward for me. But here in the bottom, in the receive from, you can just put the same Square customer we've been talking about, or whatever you want. But in this account here, these are the accounts that are going to be credited to offset this debit to the bank account. So in that particular case, we're going to have the cash and drawer account. We're going to have the cash payments to be deposited, and then we're going to have the check payments to be deposited as well. And what we would do then, so let's just go ahead and save this template. What you would do then, so let's say you deposited $100 in cash, $100 in checks from sales collected in Square to your bank, hit your bank feed. But what you want to do then is go into this template, or again, a journal entry. Now let's say it was $150 check and then $50 in cash, just to make it a little different. What you would do then is for the cash payments deposited, you would make it 50. And then for the check payments deposited, you would make it 150. So for the total deposit of $200 to your bank account, you separated it out that $150 that was the check, and then $50 of it was cash. That's important because that's what's going to be crediting those clearing accounts. And so you need to separate these out here. And this is how you would do that potentially with this bank deposit. Or if you prefer journal entries, then all it would be, and again, you can make a template for any of this, but it would just be, so you have your bank account, you have your cash payments to be collected or to be deposited, and then you have your check payments to be deposited. And then you would just debit bank account and then credit each one of those depending on whatever quantity it was of cash and checks to separate that out. That's what the journal entry would look like. So that's what that looks like on the back end. And then going back here to our entry here. So we have the Square clearing account, and this is also open-ended. And essentially what that would be is just creating a bank rule for all these Square deposits that are going to be depositing into your bank account day to day. You're just going to set up a rule to, again, just transfer from the Square clearing account to your bank account. And it's just going to credit the one asset account, the Square account, and then credit and then debit your bank account. This will allow you to do bank reconciliations day to day. And what you'll eventually do is kind of audit this clearing account on a month-to-month basis, because essentially what should be happening is, so generally throughout the month, you're going to be transferring these funds out of the Square account. It's actually going to be bringing this clearing account to the negative in the middle of the month. And then at the end of the month, whenever you enter all the sales, it should be bringing this back up to $0, the Square clearing account, or at least close to zero, because sometimes you'll still have legitimate funds left in there that are going to be deposited in the first couple of days of the following month. You just want to eventually, throughout the months, run registers of this and make sure that it's eventually every now and then going back down to zero. Is how you check the accuracy of this. Again, the gift cards here are closed off, and then finally the Square fees here are also closed off. So at this stage, we're just accounting for all the fees expensed throughout the month in this one entry here. Yeah, so that's the entirety of what I have on this topic of entering Square sales into QuickBooks Online. And in order to kind of go through this, even from the beginning, just creating the chart of accounts, you kind of need to understand the entire workflow, including the back end, especially for things like how you want to handle cash payments and check payments, if you want to combine them, if you want to separate them. Yeah, again, I would recommend, if you haven't already, just watch the whole video like you have now, and then going back and then following these steps as you go now, in order to, because there is some flexibility here of how you want to handle it for your particular business, especially according to things like cash and check collected. And especially too, you want to make sure that you're handling things like the tips collected appropriately as well. I don't know how long this video will be. I hope I covered everything. I wanted to be kind of as thorough as I could to hopefully cover the most things that I've seen in terms of Square. And so just think about if something else in your business isn't covered here, and if your report looks a little different or you're handled a certain way, just think about from beginning to end what you're doing, what the debits and credits are, how you want to look in your profit and loss and balance sheet, and then that should determine how your ultimately your specific journal entry template will look on a month to month, week to week, day to day basis.